Hello, this is Brian Rezny, president of Rezny Wealth Management. It's question and answer day. I keep getting a lot of questions on my TV radio show about tariffs. Folks, this is going to go on for a number of months more, maybe even the rest of this year. Every country that is going to hopefully get in line with fair trade with the U.S. and with negotiations, this will take time. So that means a lot of noise. A lot of individuals maybe not making the best decisions with their portfolio. I will stress this. At the beginning of the year, and if I look back even just in the last 6 weeks, Wall Street again got it wrong. They got all panic-stricken when the market had volatility. I will say that Rezny Wealth Management did not. We were actually adding some cash new positions to the market close to bottom lows. Buying low and selling high is what you're supposed to do. But I will say, if you look at statistical numbers, and this came from Vanguard, by the way, institutions were the ones that were doing the net selling 3, 4, 5 weeks ago, and the actual individual investor was not. That was coming from their accounts that they actually hold on custodian basis. Very interesting. Remember, Wall Street always gets it wrong. Wall Street hypes everything. They want you to jump from this to that to this to that. If you listen to Wall Street, you're probably making substantially less money than you should. If you've got that so-called advisor, remember, an advisor doesn't manage any money at all. The advisor is selling products through their broker-dealer or their bank insurance company, Wall Street-style firm, that they're required to sell and not the best. So ultimately, based upon the Wall Street Journal, 2% of firms are fee-only fiduciary firms like Rezny Wealth Management that actually manage money. So with that said, keeping a clear and level head with your portfolio, whether you're 85 or you're 25, is vitally important. I will tell you, managing money well over 30 years, I have seen catastrophic disasters from people that have emotional attitudes towards their money. They basically sell low. They basically reload the portfolio at new market highs, or they chase stocks that have already gone up 200-300% thinking they're going to go up more, only to crater. I've had so many calls on my radio shows just in the last few weeks from individuals that basically told me, Brian, I sold at market lows. I got nervous. My advisor was nervous. He thought that we should take money off the table. Again, your advisor's not managing any money at all. Look at their Form ADV, look at their CRS form, look at their fair disclosure form. If you see third-party money manager on there, if they sell any kind of commission products like insurance or annuities, they are not fee-only, and they're not probably managing any money at all. And unfortunately, their emotional tendencies are probably going to affect your emotional tendencies more, which create a negative effect and really poor returns on your portfolio. Delbar, an independent study, has shown this for decades. The average investor often makes less than half what the stock market makes and the bond market makes. That should not be your portfolio, and it shouldn't certainly be the advice you're receiving. If you're not happy with what's going on in your portfolio, contact Rezny Wealth Management. Go to ReznyWealth.com, click on that consultation tab. By the way, subscribe instantly to all kinds of updates that we do throughout the week so you can learn, educate yourself, and make better financial decisions. Have yourself a safe and profitable day.